Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago with the Morningstar ETF Conference, and I'm here with Kevin Baum, who's head of commodities at Vesco Powershares. Kevin, thanks for stopping by.
Thanks for having me.
So the commodity space, a little bit beaten up, a little bit unloved these days, but global demand is still there, isn't it?
Well said. A little bit beaten up is right, but demand is still strong. Supply is starting to roll over and decline. So we think that's the beginning of a firmer environment for commodity prices in 2016.
So as we finish out 2015 and people are looking at their asset allocation strategies, advisors are meeting with clients at year end, it's a little difficult to be able to say, well, we have to up our commodities allocation because it dropped off a little bit this year.
Right.
How does that discussion go? And really, let's get to the core of it. Why does that need to happen?
Well, it has to happen. We know that rebalancing really benefits a portfolio, and that's where commodities can benefit a portfolio. They're non-correlated, so the diversification benefits of adding commodities to stocks and bonds does great things for a portfolio over time. It lowers volatility, it increases returns, and just as you said, Tom, now's the time to increase that allocation because commodity prices have declined quite sharply and are at really attractive value levels right now.
So you look at gold alone, and I met with the World Gold Council a couple of weeks ago, and they were saying, listen, people don't understand in the U.S., the demand for gold is coming out from emerging market countries. And we here in the U.S. aren't a big factor in this whole equation. Maybe you can touch on that.
No, I think that's a great point. If you go back to 2004, 2005, the commodities that saw the biggest lift from China were the commodities that were being imported, copper, cotton, the industrial commodities. What we're starting to see now is that gold, cocoa, coffee, some of these commodities are really starting to see the imports into China increase very rapidly. Those are the commodities that I'd look for to have the sharpest price moves over the next couple of years.
Okay, at Powershares, you have a index and also a variety of different ETFs in the commodity space. Start out with the diversified index and how that works.
Thanks for asking. DBC is our diversified commodity fund, so that includes energy, agriculture, and metals. So you get a broad basket of commodity exposure, which is a great long-term strategic holding alongside stocks and bonds. More tactically, if you want to look at specific sectors, or as you mentioned, specific commodities, we have an agriculture fund, DBA, a DBE, which is energy, but also some single commodity funds, DBO for oil, DGL for gold. So we have a range of tools that help you gain exposure to commodities depending upon your client's needs and how they need to look at and use commodities in their portfolio.
And if you don't want to understand the different individual asset classes or sectors within commodities, DBC has got a nice balance of everything. With one ticker, you're probably good to go.
That's well said, and it's a second generation intelligent index or smart beta ETF on commodities. So what we've seen historically is that looking at the forward curve, using an optimized yield approach for sourcing your commodity exposure on the forward curve adds 5 to 6 percentage points a year of returns in DBC over those first generation traditional commodity indices. So we think it's the right product for a long-term strategic holding in commodities.
And as always, going to lift up the hood, understand what's underneath, especially with these products being futures-based. There are other tax treatments we have to take into account, but what an efficient way to get that type of allocation.
Well said. The exposure comes from exchange-traded futures contracts, been around forever, very liquid, very efficient, and those holdings are backed by U.S. Treasury bills. So it's a straightforward approach to getting commodity exposure.
Great, excellent. Kevin, thanks so much. Look forward to seeing you again soon.
Thanks, Tom. Appreciate it. Thank you.